Hi there, welcome to what's going to be the first of two podcasts I'm going to do on income statements. The first podcast is going to deal with the top half of the income statement, and you'll also hear this part called the trading account. And the trading account basically looks at how well we trade, so how much we increase the price of the goods that we purchase by when we sell them to our customers. There's two ways of laying this out. I prefer a 3-column format, but you will often see a 2-column format laid out. So I'll go over both formats and you can take the pick. Some students get confused using a 3rd column, but equally some students get confused because you've got to do a lot more thinking about your adding up and taking away when we come to this element, which is the cost of sales. Big areas, top area, will always have sales in and will always less sales returns. And we do that because we want our real value of our sales. We don't want to look at what we sold and then goods came back, but what we're adjusting is finding out the actual sales for the year. Second area is our cost of sales, and it's complicated particularly by the fact that we will sell things this year that we purchased last year and had them in as a part of our opening inventory, and we will also have purchased some things this year that won't have been actually sold to customers, and they're our closing inventory. For anybody who's looking at this, who's gone a little bit further into accounting, what we're actually doing here is meeting the matching or accruals concept. So we're making sure that our purchases recorded, or our cost of sales figure, actually reflects the cost of sales for the actual items that we've sold from our business. Okay, there's some additional information here. The information will always come out of the trial balance. Put carriage outwards in only because it's sometimes put in exam questions to confuse you. Okay, carriage outwards doesn't go in the trading account, it goes in the profit and loss account, which is the bottom half of the income statement. Closing inventory, you'll always see that given outside the trial balance. That's because it's a bit of a strange figure, and it goes outside because it actually appears in both the income statement and the balance sheet. So it's never going to be in the trial balance. And I've put a really common exam question in here, which is the goods that's being taken out for the owner's own use. Okay, so what I'll do first of all, make the adjustment for the goods taken out for the owner's own use, and we're going to adjust our purchases figure. So in the ledger account, what we would do is credit the purchases account and we'll debit drawings. And what I'm going to do over here is I'm going to do 21,000. Take away from that 1,000. Okay, so the actual purchases figure is going to be 20,000 when we get down to the second part of the trading account. Right, up to the top part. Okay, sales. Got 50,000 of sales, but our customers actually return to us £1,000 worth of goods. So they're not going to actually pay for those. So the true cost of sales for the year, that's going to be 49,000. Okay, opening inventory, looking on here, that's 4,000. We've already made the entry for our purchases, and we've adjusted that for these goods that we're actually taking out for the owner's own use. So following a concept that some of you may have heard of, but it's called the business entity concept, we consider these transactions to be nothing to do with the business. And that's why I've taken them off the purchases. We're going to less purchases returned, which are 1,000. And we're going to add our carriage inwards, and the carriage inwards was 3,000. So putting in a running total at this point, we've got 26,000 as a running total. Then what we need to take away from that 26,000 is the closing inventory of 5,000. And we need to subtract that because those goods won't be part of this year's cost of sales. We haven't sold them this year, so those goods aren't in that 49,000 that we include up there as our adjusted sales figure. So our adjusted cost of sales is 21,000. And then we're going to subtract 21,000 from 49,000 to give us 28,000, and that's the gross profit. Just a quick sort of heads up for an exam. Number of times when I'm marking external papers and also marking my own students' work that they forget to subtract the cost of sales from the sales figure to get the gross profit and label that figure as the gross profit is quite significant. So don't forget, once you've got your cost of sales, you've got to do another calculation for gross profit. The way I prefer to lay these out is using 3 columns. What I do the adjustments to the purchases in this first column. I then work out my cost of sales in the second column, and I then do the overall calculations in the third column. And it just, for me, it makes it a slightly more logical way, and it makes it easier to remember what I'm going to add and what I'm going to subtract. So sales is still 50,000. The returns are still 1,000, and therefore my sales figure, my actual sales figure, is going to be 49,000. No change there from what we've done before. I'm still putting my opening inventory. The opening inventory, as you can see, is 4,000. Okay, purchases. Need to remember to do this adjustment for goods for the owner's own use. So my purchases were 21,000. And I'm going to take off from that 1,000. So my actual purchases figure should be 20,000. Okay, good exam tip, always show your workings, because if you make an error, it will quite often be 2 marks for getting the right figure. If you put the right calculation in, even if you write the wrong figure there, you're going to get a mark. Less purchases returns, which is 1,000. So we've got a running total now of 19,000. And we're going to add the carriage inwards, which was 3,000. So my actual adjusted purchases for the year is 22,000. Just added together those 2 figures. I'm going to put another running total in here. I'm going to add the 4,000 on the 22,000. That gives me 26,000. Okay, and then I'm going to less my closing inventory, because my closing inventory isn't part of the cost of the goods that I've actually sold during the year. They're going to be sold next year. Closing inventory is 5,000. So my cost of sales figure, 21,000. Unfortunately, my gross profit here is going to be the same. It's going to be 28,000. So I know I haven't made a mistake. It's very much up to you which of the 2 layouts you're going to pick. As I've said, some people find that's much easier to do because they don't need to worry about the fact they've got 3 columns. Some people find this layout easy to do because it's quite logical. You do your purchases calculation, you do your cost of sales calculation, and then you calculate your gross profit. It's up to you which one you pick. I've got a worksheet for you to work through. The answers that I've put into the student worksheet area I've done using this layout, but it doesn't matter so long as you're getting the right figures for your true sales, your cost of sales, and then your gross profit. So the worksheet's there. There's 4 questions, A, B, C, and D, and they get progressively more difficult. On the earlier questions, you're missing quite a lot of the elements. So what you can do is you can just put a 0 figure in, for example, for your sales returns. Okay, good luck with the questions. Those of you that need to, don't forget to save a copy on your area of Google and then share it with me so that I can mark it. For some of my students, what I've also done is put you the answer sheets on there for other students. If you're doing it as a homework, you'll find that you haven't got the answers, and therefore you'll need to share it with me, and then I'll send you back the answers. Good luck. Any questions, obviously catch me, and I'll see you soon when I do the next podcast. Goodbye.